Let's dive deeper into the action when the markets reporters underneath the equity indices, bonds, currencies, commodities too. Abigail, what are you watching?
So we had a very small decline there for those major averages on the close, Caroline. But for the S&P 500, 3 down days in a row, the first time we've seen that since early October. So the melt up interrupted to some degree. Let's put it into the context of this technical chart that we've been looking at for months. So first of all, the range earlier this year with the RSI going appropriately from basically overbought to oversold. And then the range that everybody was talking about for such a long time. Once the range was broken out, we have this multi-week melt up. But today we have these 3 small down days. Mike, it looks like we may just see the S&P 500 move back down toward its 50-day moving average in orange. Probably not go anywhere near that 200-day moving average, supporting a little pause or consolidation. The RSI going back down from overbought territory. But there's an area back here, Mike, where it whipsawed up and down in that range. So it looks like we may be starting a new range, a higher range. It'll be interesting to see how it plays out, Mike.
Well, thanks, Abigail. Well, speaking of higher ranges, there's a big day in the oil market today. The most active West Texas Intermediate oil contract rising about 2.5% to $58.42 a barrel. That's the highest since late September. Futures up about 1% or more pretty much across the entire oil curve. Obviously, that meant energy producers are the bright spot in the stock market today. ExxonMobil up about 2.5%. At an ETF land, you have ETFs like XLE, the S&P Energy ETF, Alerian MLP Energy Infrastructure ETF. They're among the biggest gainers in ETF land. Those levered oil and energy ETFs up even more. Obviously, part of this is being attributed to optimism about the trade talks and what that means for the economy going forward. But there is some talk among analysts that is giving a lot of fodder for the bulls. BMO said it sees scope for West Texas Intermediate to test its highs of the year. And BNP Paribas actually raised its forecast for 2020 for both Brent and WTI. A lot of people talking about this OPEC meeting coming up at the beginning of December, Taylor. SocGen even saying that OPEC potentially could institute further cuts in production to keep those prices rising, Taylor.
Well, Mike, I'm taking a look at income-oriented investors. And if you are one of those, you go for dividend growth or high-paying dividends. And that is a question that Citigroup's global strategist tried to answer this week in a report. If you come and take a look at a chart here that I'm showing inside my terminal, they're recommending a dividend momentum strategy, basically saying that in the last 3 years in white, it is all about stocks that are looking at high dividend growth rather than dividend yield terminal charts here that I'm showing. And so this is comparing a 51% return of the dividend growth index relative to just a 28% return in an index that tracks higher yielding dividend shares. That is in blue. So at least for now, Citigroup saying go with the dividend momentum strategy.